Hello, and welcome to our deep dive into Microsoft Dynamics 365 Finance and Operations. Over the course of this series, we will journey through the core capabilities of one of the most powerful enterprise resource planning systems on the market today, with a specific focus on its application within the United States business landscape. Before we begin, it is essential to state that this series is for educational and informational purposes only. The content provided is intended to offer a general overview of the functionalities within the Dynamics 365 platform. It is not and should not be interpreted as financial, investment, tax, or legal advice. Every business has unique circumstances and requirements. Therefore, for specific guidance related to your organization, you should always consult with qualified and licensed professionals in those respective fields. Our goal is to explore the tool itself, not to prescribe how it should be used for your specific financial or legal compliance needs. So what exactly is Dynamics 365 Finance and Operations? You might hear the term ERP thrown around. ERP stands for Enterprise Resource Planning. Think of it as the central nervous system of a company. In the past, different departments of a business, like finance, sales, inventory, and manufacturing, often used separate software systems. These systems didn't talk to each other, creating data silos, inefficiencies, and a fragmented view of the business. An ERP system solves this problem by unifying all of these functions into a single, integrated platform. Dynamics 365 Finance and Operations, or F&O as it's often called, is Microsoft's flagship cloud-based ERP solution designed for medium to large enterprises. It provides a comprehensive suite of tools to manage nearly every aspect of a business, from the general ledger to the warehouse floor. Built on the Microsoft Azure cloud, it offers scalability, security, and accessibility that traditional, on-premise systems often struggle to match. For businesses operating in the United States, the value proposition is particularly strong. The American market is characterized by its complexity, scale, and stringent regulatory environment. A modern ERP system isn't a luxury, it's a necessity for sustainable growth. Dynamics 365 F&O addresses this by providing a platform that can grow with your business. Whether you are a $50 million domestic manufacturer or a multi-billion-dollar global corporation with a significant U.S. presence, the system is designed to scale and adapt. One of the primary advantages is the creation of a single source of truth. When your financial data, your supply chain data, and your production data all reside in the same system, you gain unparalleled insights. Business leaders can make decisions based on real-time, accurate information rather than on outdated reports pieced together from different sources. This is critical for everything from cash flow management to inventory forecasting. Let's briefly touch upon the core pillars of the platform, which we will explore in much greater detail in subsequent chapters. First, we have financial management. This is the heart of the system. It includes the general ledger, accounts payable, accounts receivable, budgeting, fixed assets, and cash and bank management. It provides the tools to record transactions, manage budgets, and generate critical financial statements. For U.S. businesses, the system has built-in functionalities to help manage complex requirements such as sales and use tax, and support for reporting standards. Next is supply chain management. This module is all about managing the flow of goods, from procurement of raw materials to the delivery of finished products. It covers inventory management, warehouse management, transportation management, and procurement and sourcing. In a country as vast as the United States, with complex logistics networks, these tools are indispensable for optimizing stock levels, reducing costs, and ensuring timely deliveries. Then there's manufacturing. For companies that produce goods, the manufacturing modules provide tools for production control, master planning, and quality control. Whether it's process manufacturing, discrete manufacturing, or lean manufacturing, the system offers robust capabilities to manage the entire production lifecycle. While some functionalities like human resources have evolved into their own dedicated Dynamics 365 application, the core F&O platform maintains tight integration for managing worker information, payroll-related data, and other essential personnel functions critical to the financial and operational health of the business. Finally, project management and accounting is a crucial module for professional service organizations, construction companies, and any business that operates on a project basis. It allows for detailed tracking of project costs, revenues, and progress, ensuring that projects stay on time and on budget. So, why the specific U.S. focus for this series? Because an ERP system is not a one-size-fits-all product. The way a business operates in Europe or Asia can be vastly different from how it operates in the United States. Dynamics 365 F&O offers deep localization features. This means it can be configured to align with US-specific business practices, financial regulations, and tax laws. For example, the system has dedicated frameworks for handling 1099 reporting for vendors, managing complex state and local sales tax jurisdictions, and adhering to generally accepted accounting principles, or GAAP. Our series will consistently highlight these features and configurations that are most relevant to an American audience. In essence, Dynamics 365 Finance and Operations provides the digital infrastructure for a modern American enterprise to not only compete but to thrive. It's about breaking down internal barriers, automating routine processes to free up your workforce for more strategic tasks, and leveraging data to make smarter, faster decisions. It's about building a resilient and agile operation that can adapt to changing market conditions. Throughout this series, we will move beyond the high-level overview. We will delve into specific modules, explore key functionalities, and discuss how they come together to form a cohesive, powerful whole. We will demystify the jargon and focus on the practical application of these tools in a business context. Thank you for joining me for this introduction. In our next chapter, we will begin our detailed exploration by focusing on the absolute core of the system, the general ledger and the chart of accounts, laying the foundation for all financial management within Dynamics 365. Welcome back to our deep dive into Microsoft Dynamics 365 Finance and Operations. In our first chapter, we introduced the concept of an ERP as the digital backbone of a modern American enterprise. Today, we begin our journey into the heart of the system's financial capabilities by exploring its two most fundamental components, the general ledger and the chart of accounts. As a reminder, this content is for educational purposes only and should not be considered financial, tax, or legal advice. The design and implementation of a company's financial systems should always be handled by consulting with certified professionals who can address your specific business requirements. Our focus remains on the features and functionalities of the software itself. Think of the General Ledger, or GL, as the definitive book of records for all financial transactions within an organization. Every single financial event, be it a sales invoice, a payment to a vendor, a payroll entry, or an asset depreciation, is ultimately recorded in the General Ledger. It is the central repository that provides a complete, authoritative history of a company's financial activities. In Dynamics 365, the General Ledger module serves as this central hub, ensuring that all financial data is organized, accurate, and accessible for reporting and analysis. But how does the General Ledger organize this vast amount of information? The answer lies in its foundational structure, the Chart of Accounts, or COA. The Chart of Accounts is much more than just a simple list of account numbers. It is a carefully designed framework that categorizes all of a company's assets, liabilities, equity, revenues, and expenses. A well-structured chart of accounts is the bedrock of meaningful financial reporting. Without it, you would simply have a sea of transactions with no context. In Dynamics 365 Finance and Operations, the structure of the chart of accounts is incredibly flexible and powerful, primarily through the combination of two key elements, main accounts and financial dimensions. Let's first look at main accounts. A main account represents a specific type of financial account. These are the categories you would typically see on standard financial statements. For example, main accounts would include things like cash and bank, accounts receivable, office supplies expense, sales revenue, and common stock. Each main account is assigned a category, such as asset, liability, equity, revenue, or expense. This categorization is what allows the system to automatically generate critical financial reports like the balance sheet and the income statement with accuracy. However, in today's complex business environment, especially in the US, just knowing that you spent money on office supplies isn't enough. Business leaders need to know more. Which department spent that money? Was it for the East Coast or West Coast division? Which project was it for? This is where the true power of Dynamics 365 comes into play with financial dimensions. Financial dimensions are essentially data tags that you can add to your transactions to provide additional context. They allow you to slice and dice your financial data in countless ways. Let's use a practical example. Imagine your company purchases new laptops for the marketing team. The transaction could be recorded against the main account computer equipment. But with financial dimensions, you can add more detail. You could tag the transaction with a department dimension set to marketing, a business unit dimension set to corporate headquarters, a cost center dimension that identifies the specific marketing team responsible for the expense. Now, instead of just seeing a single charge to computer equipment, you have a rich, multidimensional record. At the end of the quarter, you can easily run a report to see not just the total amount spent on computer equipment, but the specific amount spent by the marketing department at the corporate headquarters. This level of granular detail is invaluable for budgeting, forecasting, and performance analysis. For U.S. businesses with multiple locations, divisions, or product lines, the ability to analyze profitability and costs along these dimensions is a game changer. To ensure data integrity, Dynamics 365 provides powerful governance tools like account structures and advanced rules. These tools allow an organization to define which combinations of main accounts and financial dimensions are valid. For instance, you can set up a rule that prevents an expense related to manufacturing from being posted to the sales department's cost center. This creates a system of checks and balances directly within the software, helping to prevent errors and ensure that financial data is recorded consistently and accurately across the entire organization. All of this information gets into the general ledger through journal entries. A journal is simply a chronological record of transactions. Whether it's a general journal for miscellaneous entries, a vendor invoice journal, or a payment journal, every entry follows the fundamental principle of double entry accounting, ensuring that for every debit, there is an equal and opposite credit. The system enforces this rule, maintaining the balance of the accounting equation. Assets equal liabilities plus equity. In conclusion, the general ledger and the chart of accounts are not just administrative necessities. They are the strategic foundation of financial intelligence within Dynamics 365 Finance and Operations. A thoughtfully designed chart of accounts, leveraging the power of main accounts and financial dimensions, transforms the general ledger from a simple record book into a dynamic and powerful analytical tool. It provides the structure needed to gain deep insights into business performance, which is essential for any U.S. enterprise navigating a competitive landscape. In our next chapter, we will build upon this foundation. Now that we understand how transactions are categorized and recorded, we will explore two of the most active areas of any business: accounts payable and accounts receivable, and see how Dynamics 365 manages the critical flow of cash in and out of the organization. Hello and welcome back to our series on Microsoft Dynamics 365 Finance and Operations. In our last chapter, we laid the financial groundwork by examining the general ledger and the chart of accounts. Today, we're diving into the dynamic world of cash flow management by exploring two critical, interconnected functions: accounts payable and accounts receivable. As always, please remember that this discussion is for informational and educational purposes. It is not intended as financial, accounting, or legal advice. The management of your company's payables and receivables should be handled in consultation with qualified professionals who can tailor processes to your specific business needs. Our goal is to explore the capabilities of the Dynamics 365 software. At its core, business finance often boils down to managing the money coming in and the money going out. Dynamics 365 provides sophisticated modules to handle both sides of this equation with precision and efficiency. Let's start with the money going out. Accounts payable or AP. The accounts payable module is all about managing a company's relationships with its vendors and ensuring that bills are paid accurately and on time. Effective AP management is crucial for maintaining good vendor relationships, taking advantage of early payment discounts, and accurately forecasting cash outflows. The AP process in Dynamics 365 typically begins with vendor management. The system allows you to create a comprehensive profile for each vendor, which includes contact information, payment terms, and very importantly for U.S. businesses, their tax identification number for 1099 reporting purposes. This centralized vendor master file ensures consistency and accuracy across all transactions. When a purchase is made, it often starts with a purchase order, or PO. Once the goods or services are received, the vendor sends an invoice. This is where a key process known as three-way matching comes into play. Dynamics 365 can automate the matching of the purchase order, the product receipt information, and the vendor invoice. This ensures that you are only paying for what you ordered and what you actually received. Automating this process significantly reduces the risk of manual errors and fraudulent payments. Once an invoice is approved, it is recorded as a liability in the general ledger. The system then manages the payment process. You can create payment proposals based on due dates or available discounts, and the system can generate payments through various methods, from printing physical checks to processing electronic payments like ACH transfers, which are common in the U.S. banking system. This entire workflow, from purchase to payment, provides a clear audit trail and robust internal controls. Now let's flip the coin and look at the money coming in, accounts receivable, or AR. The accounts receivable module is focused on managing customers and ensuring the timely collection of payments. This is the lifeblood of any company. Efficient AR management directly impacts cash flow, liquidity, and profitability. Similar to AP, the process in AR begins with customer management. You can maintain detailed customer records, including credit limits, payment terms, and delivery preferences. Setting and managing customer credit limits directly within the system is a vital feature for mitigating risk. When a sale is made, a sales order is created, which then leads to the generation of a customer invoice. This invoice is automatically posted to the general ledger, increasing the accounts receivable balance and recording the revenue. But generating an invoice is only half the battle. Collecting the payment is what truly matters. Dynamics 365 offers a suite of tools for collections management. You can generate customer account statements, track aging balances to see which invoices are overdue, and manage collection activities. The system can help you create a structured collections process, with automated reminders and a central place to record all communication with customers regarding outstanding payments. This proactive approach helps to reduce the number of days sales are outstanding, thereby improving cash flow. When a customer payment is received, it is recorded in a payment journal and applied against the specific open invoices. This relieves the customer's outstanding balance and increases the company's cash account. The system can also handle more complex scenarios, such as customer prepayments, partial payments, and credit memos for returns or disputes. The true beauty of using an integrated system like Dynamics 365 is how the accounts payable and accounts receivable modules seamlessly interact with the general ledger. Every transaction, whether it's a vendor payment or a customer receipt, is posted in real time. This means that at any given moment, business leaders can get an accurate, up-to-the-minute picture of the company's cash position and overall financial health. In summary, the AP and AR modules are the operational engines that drive a company's daily financial activities. By automating and streamlining these processes, businesses in the United States can enhance efficiency, strengthen internal controls, and gain critical visibility into their cash flow. In our next chapter, we will expand on our discussion of financial management by looking at another critical area: budgeting and fixed asset management. We will explore how Dynamics 365 helps organizations plan for the future and manage their long-term investments. Welcome back to our deep dive into Microsoft Dynamics 365 Finance and Operations. In our last chapter, we focused on the daily flow of cash through accounts payable and accounts receivable. Today, we shift our perspective from daily operations to long-term financial strategy by exploring two essential modules: budgeting and fixed asset management. Before we proceed, we want to reiterate that this series is for educational and informational purposes only. It is not financial, tax, or accounting advice. The creation of a corporate budget and the policies for managing fixed assets are significant financial decisions that should always be made in consultation with certified financial and accounting professionals. Our focus is strictly on the functionality that the Dynamics 365 software provides. Let's begin with budgeting. In the context of an ERP system like Dynamics 365, a budget is far more than just a static spreadsheet created once a year. It's a dynamic and integrated tool for financial planning, and more importantly, for control. The budgeting process in Dynamics 365 allows organizations to create a detailed financial plan. This plan can be developed using data from previous years, and can be structured around the financial dimensions we discussed in Chapter 2. This means you can create budgets not just for the entire company, but for specific departments, cost centers, or business units. This granular approach is essential for large, diversified U.S. companies. Once a budget is finalized and approved within the system, it is recorded in what's called a budget register. This becomes the baseline against which actual performance is measured. But the real power of the module lies in budget control. Budget control is a feature that actively monitors company spending against the approved budget in real time. Organizations can configure the system to check expenditures at the point they are initiated. For example, when a user creates a purchase requisition or a purchase order, the system can be set up with specific rules. For instance, it can be configured to simply warn the user if a purchase will exceed the budget, or it can be set to completely prevent the transaction from proceeding without a specific override or approval. This proactive control helps prevent budget overruns and ensures that spending aligns with the company's financial plan. Furthermore, the budgeting module is integrated with workflows. This means a proposed budget or a budget amendment can be electronically routed through the proper channels for review and approval, creating a clear and auditable trail of all changes. Now let's turn our attention to managing the company's long-term investments through the Fixed Asset Management module. Fixed assets are tangible long-term assets that a business owns and uses to produce income, such as land, buildings, machinery, vehicles, and computer equipment. They are not expected to be converted into cash within a year. The Fixed Asset module in Dynamics 365 provides a specialized subledger to manage the entire lifecycle of these assets, from acquisition to disposal. The lifecycle begins with acquisition. An asset can be acquired and entered into the system through a purchase order, a vendor invoice, or directly through a journal entry. Once in the system, each asset has a detailed record, including its acquisition date, cost, and other relevant information. The next, and perhaps most critical, phase is depreciation. Depreciation is the accounting process of allocating the cost of a tangible asset over its useful life. The Dynamics 365 system supports a wide variety of depreciation methods that are common in the United States. This includes methods like straight-line, various forms of declining balance, and others. It is critical to note that the choice of a depreciation method is a major accounting policy decision. This decision must align with the company's policies and relevant accounting standards, like US GAAP, and should be made in consultation with professional accountants. The software simply provides the flexibility and tools to execute the chosen policy. Over the life of an asset, the system can also handle value adjustments. This could include writing up the value of an asset or, more commonly, recording an impairment or write-down if the asset's value has decreased. Finally, the life cycle ends with disposal. When an asset is sold, scrapped, or retired, the system helps you process the disposal transaction. It will automatically calculate and post the resulting gain or loss on the disposal, ensuring the general ledger is updated correctly. By integrating the fixed asset subledger directly with the general ledger, Dynamics 365 ensures that a company's financial statements always reflect the correct value of its assets and the corresponding depreciation expense. This level of control and accuracy is fundamental for sound financial reporting. In summary, the budgeting and fixed asset management modules in Dynamics 365 provide the essential tools for forward-looking financial planning and the management of a company's long-term capital investments. They transform static plans and asset lists into active, controlled components of the financial system. Having now covered the core financial management modules, we will broaden our scope in the next chapter. We will move from the finance department to the warehouse and explore the vast capabilities of supply chain management and inventory control. Welcome back to our journey through Microsoft Dynamics 365 Finance and Operations. Having established a strong understanding of the core financial modules, we now move from the world of debits and credits to the physical world of goods and materials. In this chapter, we will explore the comprehensive capabilities of supply chain management and inventory control. As we begin, it's crucial to reinforce our guiding principle. This content is for educational purposes only. It is not financial, tax, or operational advice. Specifically, topics like inventory valuation have significant accounting and tax implications. The choice of a valuation method is a critical business decision that must be made with the guidance of certified accounting and tax professionals. Our goal is to demonstrate the tools the software provides to execute your company's chosen policies. Supply chain management, or SCM, in Dynamics 365 is about managing the entire end-to-end flow of your products, from the moment you procure raw materials from a supplier, through manufacturing and warehousing, all the way to final delivery to your customer. It's a vast area, so today we will focus on its foundational element: inventory and warehouse management. At the heart of SCM is inventory management. This module is the system of record for every item your company holds. It answers the fundamental questions: what do we have? How much of it do we have? Where is it located? And what is it worth? The system uses a detailed release product master record for each item. This is a central repository of all information about a product. To track items with precision, Dynamics 365 uses a powerful system of inventory dimensions. These are divided into 3 categories. First, product dimensions such as size, color, and style. These are essential for industries like apparel or consumer goods. Second, storage dimensions, which specify the physical location of an item. This hierarchy includes site, your geographical location, warehouse, and then down to the specific aisle, rack, and bin location within that warehouse. Third, tracking dimensions. These are critically important for quality control and traceability. a major concern for many U.S. industries. This includes batch numbers for tracking production lots and serial numbers for tracking individual items. In the event of a product recall, these dimensions allow a company to quickly identify and locate affected goods, which is a vital capability. Now let's address the crucial topic of inventory value. The system must assign a cost to the inventory on hand, which directly impacts the cost of goods sold and, ultimately, the company's profitability. Dynamics 365 supports all major inventory costing models used in the United States, including FIFO, first in, first out, LIFO, last in, first out, weighted average, and standard cost. Again, it is impossible to overstate that the selection of one of these methods is a major strategic decision for any business. For example, the use of LIFO is permitted under US GAAP, but is disallowed under international standards, and it can have profound tax consequences. The role of Dynamics 365 is not to recommend a method, but to provide a robust and accurate engine to calculate inventory cost based on the method your company, with the help of its professional advisors, has chosen to implement. While inventory management tells you what you have, the Warehouse Management Module, or WMS, tells you how to handle it. WMS optimizes the physical processes within a warehouse. This is a sophisticated module that directs warehouse workers in their day-to-day tasks, often through handheld mobile devices or barcode scanners. Key features of the WMS module include inbound operations. The system guides the receiving process from unloading a truck to quality inspection and directing the worker on the most efficient, put-away path to store the goods. Outbound operations. For customer orders, the system manages the entire fulfillment process. It can create optimized picking routes for workers, manage the packing process at a packing station, and stage the goods for shipment. Inventory control within the warehouse. The module supports processes like cycle counting to ensure inventory accuracy without shutting down the entire warehouse for a physical count. It also manages replenishment, automatically creating tasks to move goods from bulk storage to forward picking locations. These two modules, inventory and warehouse management, work together to provide a complete, real-time picture of a company's stock. This visibility is key to optimizing inventory levels, reducing carrying costs, preventing stockouts, and improving order fulfillment accuracy. For a business operating across the vast and complex logistics network of the United States, these capabilities are not just beneficial, they are essential for competing effectively. In summary, the supply chain management tools within Dynamics 365 provide the physical backbone for a company's operations, ensuring that the right product is in the right place at the right time, and that its value is accounted for accurately. In our next chapter, we will take the raw materials and components we've just learned how to manage, and see how they are transformed into finished goods as we explore the world of manufacturing and production control. Welcome back to our comprehensive look at Microsoft Dynamics 365 Finance and Operations. In our last chapter, we mastered the art of managing our physical goods through inventory and warehouse control. Now we take those raw materials and components and transform them. Today, we're stepping onto the shop floor to explore the powerful world of manufacturing and production control. As we proceed, please keep our standard disclaimer in mind. This chapter is for informational purposes only and is not intended as advice on manufacturing strategy, cost accounting, or regulatory compliance. Key decisions, such as selecting a production costing method, have significant financial implications and should be made in partnership with certified accounting and operational professionals. Our objective is to showcase the functionalities available within the software. One of the greatest strengths of Dynamics 365 is its capability to handle mixed-mode manufacturing. This means it isn't limited to a single style of production. It natively supports 3 primary manufacturing methodologies, which can be used separately or even together within the same organization. First is discrete manufacturing. This is the most traditional form, where you produce distinct, countable items. Think of assembling a car, a piece of furniture, or a computer. The core components here are the bill of materials, or BOM, which is the detailed recipe of parts, and the route, which lists the sequence of operations or labor steps required to build the product. Second is process manufacturing. This is used for products that are mixed or created from a formula or recipe, often in batches. Examples include chemicals, food and beverage, and pharmaceuticals. Instead of a BOM, process manufacturing typically uses a formula. A key concept here is the ability to manage co-products and byproducts, where a single process can yield multiple different end items.
Disclaimer: the information presented is for informational purposes only, and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
Third is lean manufacturing. This methodology is focused on minimizing waste and maximizing value by creating a continuous flow of production. Instead of large production orders, lean manufacturing in Dynamics 365 is managed through production flows and Kanbans, which are signals to produce or move an item only when it is needed. The ability to support all three modes makes the system incredibly versatile for modern U.S. manufacturers who may, for example, use process manufacturing to create a chemical ingredient, and then use discrete manufacturing to package and assemble the final product. Regardless of the mode, most production activities are managed through a central document, the production order. A production order combines the BOM or formula and the route to authorize and track the entire manufacturing process for a specific quantity of a product. The life cycle of a production order in Dynamics 365 follows several key stages. Created. The order is first generated, either manually or automatically based on demand. Estimated. The system calculates the anticipated cost for all materials and labor, giving you a baseline. Scheduled. The system schedules the necessary operations on the required machines or work centers. Released. The order is formally sent to the shop floor, and necessary documents like picking lists can be printed. Started. Work begins. As raw materials are picked from inventory and consumed, and as workers report their time on specific operations, the system tracks these actual costs in real time. Reported as finished. Once the production run is complete, the finished goods are reported. This moves the items into finished goods inventory, making them available for sale. Ended. This is the final financial closing step. The system calculates the final actual cost of the production run and compares it to the estimated cost. Any difference is posted as a variance, providing crucial feedback for financial analysis. A critical part of this process is quality management. Dynamics 365 has built-in features to ensure products meet required standards. You can define specific tests that must be performed, for example, on incoming raw materials or at certain steps during production. If a product fails a test, the system can automatically create a non-conformance record and quarantine the items, preventing defective goods from reaching the customer. For U.S. manufacturers in regulated industries, these integrated quality and traceability tools are indispensable for supporting compliance efforts. In summary, the production control module in Dynamics 365 provides a complete, end-to-end solution for planning, executing, tracking, and costing all manufacturing activities. It offers unparalleled visibility into the shop floor, enabling businesses to control costs, improve quality, and increase efficiency. Now that we understand how to manage our inventory and how to manufacture products, a key question arises. How do we know what to make, what to buy, and when? In our next chapter, we will answer that question by exploring master planning, the powerful engine that balances supply and demand across the entire organization. Welcome back to our deep dive into Microsoft Dynamics 365 Finance and Operations. We have journeyed through the core of finance, walked the warehouse floor managing inventory, and stood on the shop floor overseeing production. Today, we ascend to the control tower to explore the powerful engine that connects all these functions, master planning. As we delve into this strategic topic, it's essential to restate our core principle. This series is for educational purposes. We are exploring the features of a software tool. Master planning generates suggestions to support decision-making, not to replace it. The configuration and use of this module are strategic business processes that require deep operational knowledge and should be aligned with your company's specific goals. This is not operational, financial, or business advice. So what is master planning? At its core, master planning is the process of balancing supply and demand. It is the brain of your supply chain, constantly working to answer three critical questions for every item you manage. What do we need? How much of it do we need? And when do we need it by? Its ultimate goal is to ensure that you have the right materials and products on hand to meet customer demand, without carrying excessive, costly inventory. To perform this complex calculation, the master planning engine looks at two sides of the equation: demand and supply. Let's first consider demand. This is the signal that tells the system what you need. Demand can come from several sources. Sales orders. These are firm commitments to your customers and represent real, immediate demand. Demand forecasts. This is anticipated future demand, which can be entered into the system to allow for proactive planning. Safety stock. These are the minimum inventory levels you configure in the system to act as a buffer against unexpected fluctuations in demand or supply. And finally, demand can also come from other production orders that require a specific component or subassembly. On the other side of the equation is supply. This is what you already have or what you have on the way. The system looks at on-hand inventory, the physical stock you currently possess in your warehouses, open purchase orders, items that you have already ordered from your vendors but have not yet received, open production orders, finished goods that are currently being manufactured on your shop floor. The master planning engine, which is typically run on a recurring basis, such as every night, takes all of this information, all the demand signals and all the supply signals. It then performs a calculation known as netting. It nets the total demand against the total supply to identify any future shortages. When it identifies a shortfall for a finished product, it doesn't stop there. It performs a process called requirement explosion. It looks at that product's bill of materials and calculates the required quantities of all the components and raw materials needed to produce it, checking the supply and demand for each one, level by level. This brings us to the most important output of the master planning process, planned orders. It is crucial to understand that a planned order is a suggestion generated by the system. It is not a real order yet. Based on its calculations, the system will create planned orders to cover any identified shortages. These suggestions can take several forms. A planned purchase order suggests that you need to buy a specific quantity of an item from a vendor by a certain date. A planned production order suggests that you need to manufacture a specific quantity of an item in-house. And a planned transfer order suggests that you need to move inventory from one warehouse or location to another to cover demand. The role of the human planner is indispensable here. Planners come in each day and review these system-generated suggestions. They use their experience and knowledge of the business to validate them. They might combine multiple planned purchase orders to the same vendor to get a better price, or delay a planned production order because they know a machine is down for maintenance. Once the planner is satisfied, they firm the planned order. It is only at this point that the suggestion is converted into a real, actionable document, a live purchase order, a production order, or a transfer order. The system is highly configurable, allowing businesses to set up different planning strategies for different items using coverage groups. For example, high-value, long lead time items can be planned differently from low-value, commodity items. This flexibility allows the tool to be tailored to the unique needs of any U.S. business, from coast to coast. In summary, master planning is the intelligent engine that provides dynamic, data-driven recommendations to ensure your operational activities are perfectly aligned with your customer demand. It provides the visibility and foresight necessary to run a lean, efficient, and responsive supply chain. Now that we have planned how to meet demand, our next chapter will focus on where that demand originates. We will explore sales order management and customer service, examining how Dynamics 365 handles the entire quote-to-cash process. Welcome back to our ongoing exploration of Microsoft Dynamics 365 Finance and Operations. In our last chapter, we used the powerful master planning engine to align our supply with anticipated demand. Today, we turn our attention to the source of that demand, our customers. We will be covering sales order management, which encompasses the entire quote-to-cash lifecycle. As we navigate this topic, please remember that this content is for educational purposes. We will be discussing functionalities related to pricing, customer credit, and sales tax. The strategies and policies your company adopts in these areas are significant business and legal decisions. They should always be formulated in consultation with professional advisors. Our goal is to explain how Dynamics 365 can be configured to execute your chosen strategies. The sales process within Dynamics 365 is a fully integrated workflow that ensures a seamless flow of information from the initial customer inquiry to the final cash receipt. It often begins with a sales quotation. A customer service representative can create a formal quote for a customer, outlining items, quantities, pricing, and potential delivery dates. This quote can be sent to the customer for approval. One of the key efficiencies of the system is that once the customer agrees, this quote can be converted into a live sales order with a single click, eliminating the need for duplicate data entry and reducing the chance of errors. The sales order is the central document that drives the entire fulfillment process. It captures all the critical details of a customer's request. But one of the most important questions at this stage is, what is the correct price? For businesses in the United States, pricing can be incredibly complex. You might have different prices for different customers, special pricing for distributors, volume-based discounts, or temporary promotional campaigns. Dynamics 365 handles this through a powerful and flexible framework called trade agreements. Trade agreements allow you to set up sophisticated pricing and discount rules that the system applies automatically. For example, you can configure rules for a specific customer, a group of customers, or for all customers, ensuring that the pricing on every sales order is accurate and consistent with your company's commercial policy. Another critical aspect of managing sales is managing risk. The credit management functionality in Dynamics 365 is a key tool for this. For each customer, you can establish a credit limit within the system. When a new sales order is created, the system can automatically check if this new order, combined with the customer's existing balance, will exceed their credit limit. Based on your configuration, the system can either display a warning to the user or place the sales order on a hold. This hold prevents the order from being processed for shipment until a designated credit manager has reviewed and approved it, providing a crucial internal control. Now, we must address a topic of paramount importance for any business operating in the United States: sales tax. The U.S. has one of the most complex sales tax systems in the world, with thousands of different tax jurisdictions across states, counties, and cities. Dynamics 365 is architected to manage this complexity. It has native functionality to set up sales tax codes and groups. However, for most U.S. businesses, the best practice is to leverage the system's ability to integrate with specialized, third-party tax software solutions. These integrations allow for real-time sales tax calculation on every sales order line, based on the precise shipping address. The system sends the transaction details to the tax service, which instantly returns the correct tax amount. It is vital to understand that Dynamics 365 and its integrations are tools for calculation. The ultimate responsibility for sales tax compliance rests with the business. Proper setup and adherence to tax law requires the guidance of qualified tax professionals. Once pricing is confirmed, credit is checked, and taxes are calculated, the sales order is ready for fulfillment. The order is released to the warehouse, which triggers the picking, packing, and shipping processes we discussed in our chapter on warehouse management. After the goods have been shipped, the final step in the sales order process is invoicing. The system generates a customer invoice directly from the sales order data. This action accomplishes two critical things. It creates the official document to send to the customer for payment, and it posts the financial transaction to the general ledger, officially recording the revenue and the accounts receivable. This completes the quote-to-cash cycle, providing a complete, auditable trail from start to finish. In our next chapter, we will expand our view of customer engagement beyond traditional business-to-business sales and explore how the platform supports modern retail operations with Dynamics 365 Commerce and Retail Management. Welcome back to our series on Microsoft Dynamics 365. In our last chapter, we mastered the traditional business-to-business sales order process. Today, we evolve that conversation to address the dynamic and demanding world of the modern consumer. We will be exploring Dynamics 365 Commerce, the component of the platform designed for omnichannel retail. Before we dive in, let's address our standard disclaimer. This overview is for informational purposes. The world of retail involves complex areas like payment card processing, data privacy, and promotional strategies. The functionality described here is a tool to support your business operations. Adhering to standards like the Payment Card Industry Data Security Standard, or PCI DSS, and complying with consumer data privacy laws are the sole responsibility of the business and require dedicated legal and security expertise. So, what is Dynamics 365 Commerce? It's an end-to-end, omnichannel solution built on the foundation of the finance and operations platform we've been discussing. The core concept is unified commerce. In the past, a retailer's brick-and-mortar stores, their e-commerce website, and their call center often ran on separate, disconnected systems. This created major challenges, leading to inconsistent pricing, inaccurate inventory information, and a fragmented view of the customer. Unified Commerce solves this by bringing all of these channels together into a single, cohesive platform. Let's start with the most familiar retail environment, the in-store experience. Dynamics 365 Commerce includes a modern, intuitive point-of-sale, or POS application. This is the software that runs on the terminals in a physical store. It's much more than just a cash register. Key functionalities include seamlessly processing sales, returns, and exchanges, accepting a wide variety of payment methods, including cash, gift cards, and credit or debit cards through secure, integrated payment terminals. Providing sales associates with clienteling tools, allowing them to look up a customer's purchase history and preferences to offer a more personalized shopping experience. And crucially, it offers real-time inventory visibility. An associate can instantly see if an out-of-stock item is available at another nearby store or in the central warehouse. Next is the digital storefront. Dynamics 365 Commerce includes a native, full-featured e-commerce platform. This allows businesses to build, manage, and scale their online stores. Because it's part of the same unified system, the products, prices, promotions, and inventory shown online are sourced from the exact same central database as the physical stores. This eliminates the common problem of selling an item online that is actually out of stock. The magic that ties all of this together happens in the commerce headquarters, which is the back-office component running within finance and operations. This is where all retail activities are centrally managed. From here, businesses can perform merchandising, manage the full product lifecycle, create product catalogs, and define the specific assortments of products available in different stores or channels. Orchestrate pricing and promotions. This is a key strength. You can create highly complex retail promotions, like buy one, get one free, tiered discounts, or coupon codes, and deploy them consistently across both your physical stores and your e-commerce site. Manage inventory. With a single, global view of inventory across all locations, you can enable powerful modern fulfillment scenarios. These include buy online, pick up in-store, BOPIs, buy online, return in-store, and ship from store, where a local store can act as a mini distribution center to fulfill online orders faster. Finally, unified commerce provides a 360-degree view of the customer. Whether a customer shops online, in-store, or through a call center, all their activities and purchase history are tied to a single customer profile. This enables the creation of powerful loyalty programs, where customers can earn and redeem points seamlessly, no matter how they choose to shop. It's important to note that managing this rich customer data comes with the significant responsibility of protecting customer privacy in accordance with all applicable laws. In summary, Dynamics 365 Commerce empowers U.S. retailers to meet the high expectations of today's consumers by delivering consistent, seamless, and personalized experiences across every touchpoint. Having covered how products are sold to both businesses and consumers, we will shift our focus in the next chapter to businesses that sell services or manage large-scale undertakings, as we explore project management and accounting. Welcome back to our comprehensive series on Microsoft Dynamics 365. We've explored how the system manages businesses that make, stock, and sell physical products. Today, we shift our focus to an entirely different business model: organizations that deliver complex projects or services. We will be examining the powerful, integrated module for project management and accounting, often abbreviated as PMA. Before we begin, it is critically important to address our standard disclaimer with added emphasis. This chapter will touch upon advanced accounting topics, most notably project costing and revenue recognition. The rules governing these areas, especially under United States Generally Accepted Accounting Principles, or US GAAP, are extremely complex. The selection and application of accounting policies for your projects are significant financial and legal responsibilities. These decisions must be made under the guidance of certified public accountants or other qualified financial professionals. Our purpose here is to demonstrate the software functionalities that help execute your chosen policies, not to provide accounting advice. The Project Management and Accounting module is designed for industries like professional services, engineering, construction, software development, and marketing agencies. Its primary strength is that it breaks down the traditional wall between the project managers running the project and the finance department accounting for it. It creates a single, unified environment to manage a project's entire lifecycle, from the initial quote to the final invoice and financial reporting. Let's walk through that lifecycle within Dynamics 365. It starts with project initiation and planning. A project can be initiated, and its high-level scope and budget can be defined. A key tool for planning is the Work Breakdown Structure, or WBS. This is a visual and hierarchical representation of the project, breaking down large deliverables into smaller, more manageable tasks and work packages. The WBS becomes the foundation for estimating effort, assigning resources, and tracking progress. Once the plan is in place, we move to project execution. This is where the actual work happens, and, just as importantly, where all costs associated with that work are captured. The system can track several types of project costs. Hours. Employees or resources can record the time they spend on specific project tasks using integrated timesheets. Expenses. Project-related expenses such as travel and lodging can be submitted through expense reports and directly charged to the project. Items. This includes both materials consumed from your own inventory and items purchased specifically for the project from an external vendor. Because this is all happening within one integrated system, a project manager has real-time visibility into the project's health. They can use dashboards and reports to monitor progress against the WBS, track actual costs against the budget, and analyze key performance indicators to ensure the project stays on track. This brings us to the accounting side of the module, starting with project billing. Dynamics 365 supports the common billing arrangements used in project-based work. For example, you can configure a project for time and material billing, where the client is invoiced for the actual hours worked and expenses incurred, or fixed price billing, where the client is billed predetermined amounts, often upon the completion of specific project milestones. The system can automate the process of generating project invoices based on these predefined rules, ensuring accurate and timely billing. Finally, we arrive at the most complex financial topic in this module: revenue recognition. For long-term projects, revenue is typically earned over time as the work is performed, not just when the final bill is paid. The system provides powerful tools to help automate the calculation of earned revenue based on your company's established accounting policy. For instance, it can be configured to use the percentage of completion method, where revenue is recognized in proportion to the project's progress. To be perfectly clear, the D365 system is a calculation engine. It will execute the rules that you define. It is the responsibility of the business, with its accounting advisors, to ensure that those rules are fully compliant with all relevant accounting standards. In summary, the Project Management and Accounting module in Dynamics 365 provides an unparalleled, integrated toolset for service-based businesses in the U.S. to plan, execute, and financially control their projects from start to finish. Now that we have covered the major operational and financial pillars of the system, our next chapter will focus on how to make sense of all the data we are collecting. We will explore business intelligence, reporting, and analytics in Dynamics 365. Welcome back to our deep dive into Microsoft Dynamics 365 Finance and Operations. Over the last 10 chapters, we have explored how this powerful system captures a vast amount of data from every corner of the business, from financial transactions and inventory movements to production orders and project timesheets. Today, we're going to focus on how we get value out of that data. This chapter is all about business intelligence, reporting, and analytics. As we begin, please remember our consistent theme. This series is for educational purposes. The tools we are about to discuss are designed to present and visualize data to support human decision-making. They do not provide financial, investment, or business advice. The insights drawn from data and the subsequent actions taken are the responsibility of the business and its leaders. In Dynamics 365, data analysis isn't a one-size-fits-all concept. The platform provides a multi-layered approach to meet the diverse needs of users across the organization. We can think of this in 3 tiers. The first tier is operational reporting. These are the day-to-day, formatted documents that a business needs to function. Think of a printed customer invoice, a purchase order sent to a vendor, or a packing slip that goes with a shipment. In Dynamics 365, these reports are typically generated using SQL Server Reporting Services, or SSRS. They are designed to be precise, pixel-perfect, and easily shareable in formats like PDF, making them ideal for official records and external communication. The second tier is dedicated financial reporting. While you can get financial data from operational reports, accountants have very specific needs for creating formal financial statements. For this, Dynamics 365 has a specialized tool, often still referred to by its former name, Management Reporter. This powerful tool is designed for finance professionals to build, generate, and consolidate financial statements like the income statement, balance sheet, and statement of cash flows. Its key strength is the ability for accountants to define reusable report structures, with specific rows, columns, and organizational hierarchies, allowing them to slice and dice financial data by any financial dimension without needing help from the IT department. The third and most dynamic tier is interactive analytics. This is where modern business intelligence, or BI, comes to life. Dynamics 365 embeds analytics directly into the user experience through analytical workspaces. These are role-based dashboards that provide a visual, at-a-glance summary of key performance indicators, or KPIs, and trends. For example, a chief financial officer can log in and see a workspace with interactive charts showing cash flow, profitability, and budget versus actuals. A warehouse manager's workspace will show KPIs related to order fulfillment rates and inventory accuracy. The technology powering these beautiful, interactive visuals is Microsoft Power BI. Power BI is Microsoft's market-leading analytics platform, and it is deeply integrated with Dynamics 365. These embedded dashboards allow users to do more than just view the data, they can interact with it. Clicking on a bar in a chart can filter the entire page, allowing a user to drill down and explore the data to understand the why behind the numbers. For even more advanced scenarios, users can create standalone Power BI reports that combine data from Dynamics 365 with data from other systems, like a CRM or a marketing automation platform, to get a true enterprise-wide view of the business. To ensure that all this analytical activity doesn't slow down the day-to-day operations of the company, the system utilizes a feature called the Entity Store. This is essentially a separate, read-only database that is optimized specifically for reporting and analytics. Data is regularly refreshed from the main transactional database to the Entity Store, providing a high-performance platform for users to run complex queries and explore data without impacting system performance for their colleagues who are processing orders or posting invoices. In summary, Dynamics 365 provides a comprehensive and layered set of tools that transform the raw transactional data of your business into a strategic asset. It empowers every user, from the clerk printing an invoice to the CEO exploring market trends, with the information they need to do their jobs more effectively. Now that we understand how to operate the system and analyze its data, our next chapter will focus on how the system is managed, secured, and maintained. We will delve into the world of the IT professional and explore system administration, security, and lifecycle services. Welcome back to our deep dive into Microsoft Dynamics 365. Thus far, we have focused on what the system does, managing finance, supply chain, sales, and projects. Today, we're pulling back the curtain to look at how the system is managed, secured, and maintained. We are entering the world of the IT professional to discuss system administration, security, and lifecycle services. As always, we must begin with our important disclaimer. This chapter is for informational purposes only. The design and implementation of an application security model is a critical function that directly relates to a company's internal controls and regulatory compliance obligations. This process requires specialized security and audit expertise. The features described here are the tools that enable your policies. They are not a substitute for professional guidance. First, let's talk about system administration. This involves the day-to-day tasks required to keep the ERP system running smoothly and efficiently. In Dynamics 365, this includes activities like user management, creating user accounts and ensuring they have the appropriate licenses. This is tightly integrated with Microsoft's cloud identity platform, Azure Active Directory. Batch job management. Many intensive system processes, like a master planning run or the posting of a large invoice journal, are best run in the background. Administrators are responsible for scheduling, monitoring, and troubleshooting these batch jobs to ensure they complete successfully, typically during off-peak hours to optimize system performance. Workflow configuration. Administrators also help set up and maintain the approval workflows that are used throughout the system, such as for purchase requisitions or budget approvals. Next, we move to arguably the most critical topic in this chapter: security. Dynamics 365 Finance and Operations employs a sophisticated, granular role-based security model. The fundamental principle is that you don't grant permissions to individual users. Instead, you grant permissions to a role, and then assign users to that role. This security framework is built on a hierarchy of 3 components. At the top is the role, which corresponds to a person's job function. Examples would be accounts payable clerk, sales manager, or warehouse worker. Each role is made up of 1 or more duties. A duty is a collection of related business tasks. For instance, the maintain vendor invoices duty would be part of the accounts payable clerk role. Each duty, in turn, is composed of privileges. A privilege grants the specific permission to access a part of the application, like a specific screen, button, or report, and defines the level of access, such as view, edit, or create. This layered structure is incredibly powerful. It allows an organization to enforce the principle of least privilege, ensuring that users only have access to the information and functions strictly necessary to perform their jobs.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
It is also the primary tool for establishing segregation of duties, a vital internal control concept that prevents a single individual from having conflicting permissions, such as the ability to both create and approve a vendor payment. This robust security framework provides the tools to help organizations meet their internal control and regulatory compliance objectives, such as those related to the Sarbanes-Oxley Act, or SOX. However, the design, implementation, and ongoing auditing of a security model are highly specialized activities that must be handled by qualified security and audit professionals. Finally, let's talk about the command center for the entire platform, Lifecycle Services, or LCS. LCS is a cloud-based collaboration portal that is used to manage the entire lifecycle of your Dynamics 365 environment. Key functions within LCS include environment management. This is where you deploy all of your D365 environments, from initial development and testing sandboxes all the way to your live production environment. Monitoring and diagnostics. LCS provides a suite of tools for monitoring the health and performance of your production system, helping administrators to proactively identify and resolve issues. Issue search. This is a valuable knowledge base that allows you to search for known issues, see their status, and find potential workarounds or planned hotfixes from Microsoft. And Business Process Modeler, a tool that helps organizations document their business processes and align them with the standard functionalities in Dynamics 365. In essence, LCS is the essential portal for IT teams and implementation partners to manage a Dynamics 365 deployment from the initial project kickoff through go-live and ongoing maintenance. In our next chapter, we'll explore how to tailor the system to your unique business needs without complex coding, as we dive into personalization, customization, and the Power Platform. Welcome back to our series on Microsoft Dynamics 365. In our last chapter, we explored the essential administrative and security frameworks that keep the system running safely and smoothly. But what happens when your business has a unique need that isn't met by the standard, out-of-the-box system? Today, we'll answer that question by exploring the powerful and flexible options for tailoring the system: personalization, customization, and the Microsoft Power Platform. As we begin, please remember our standard disclaimer. This overview is for educational purposes. While the tools we will discuss provide immense flexibility, improper modifications, especially code-based customizations, can impact system performance and upgradability. Such changes should be planned and executed by qualified technical professionals following best practices. Let's start with the simplest and safest way to tailor the system: personalization. Personalization refers to the changes that an individual user can make to their own interface to improve their productivity. These changes affect only that user and don't require any coding. Examples of personalization include rearranging the order of columns in a list or grid to see the most important information first, hiding fields or columns that are not relevant to your job, adding fields to a form from a related table, for example, adding the customer's phone number to a sales order list view, and saving specific filter combinations as a saved view, so you can quickly access a list of, say, my open sales orders in California, with a single click. Personalization is a built-in feature designed to empower every user to make the system work best for them. The next level up is customization. This is where the term gets more technical. Customization involves a developer writing code to extend the application's functionality. It's important to understand that the modern approach in Dynamics 365 is through extensions. Instead of changing Microsoft's core source code, developers build their solutions on top of it. This model is crucial because it ensures that customizations do not break when Microsoft releases system updates. Common examples of customization include adding new fields to track data that is unique to your industry, creating entirely new forms and tables to manage a business process that is specific to your company, and developing complex, custom reports or data integrations with other legacy systems. Customization is a powerful tool for filling functional gaps, but it requires careful planning, development, and testing. This brings us to the modern and often preferred method for extending the system: the Microsoft Power Platform. The Power Platform is a suite of low-code and no-code tools that allows non-developers, or citizen developers, to build solutions that integrate seamlessly with Dynamics 365. Let's look at the key components. First, there's Power Apps. This is a tool for rapidly building custom mobile and web applications. For example, a quality inspector could use a simple Power app on a tablet to conduct inspections on the factory floor, take pictures of defects, and have that data instantly saved back into the quality module in Dynamics 365. Next is Power Automate. This is the automation engine. It allows you to create workflows that connect Dynamics 365 with hundreds of other applications. A simple example would be to create a flow so that whenever a new vendor is created in Dynamics 365, an approval request is automatically sent to the finance manager via email. All of this is connected through a secure, underlying data platform called Microsoft Dataverse. Dataverse allows data to flow securely between Dynamics 365 and the Power Platform, enabling these extensions to read and write information in real time. In summary, Dynamics 365 offers a full spectrum of options to meet unique business requirements. It starts with simple user personalization, extends to developer-led customization for complex needs, and is supercharged by the low-code capabilities of the Power Platform, empowering businesses across the US to create a truly tailored ERP solution. In our next chapter, we will delve deeper into how Dynamics 365 communicates with the outside world as we explore data management and integrations. Welcome back to our series on Microsoft Dynamics 365 Finance and Operations. In our last chapter, we explored the many ways the system can be tailored to meet unique business needs. Today, we're going to discuss a critical technical topic that underpins any successful ERP implementation and ongoing operation: data management and integrations. This chapter is all about how data gets into, out of, and flows between Dynamics 365 and the other applications in your technology landscape. As we cover these technical subjects, please keep our standard disclaimer in mind. This content is for educational purposes. Data migration and system integration are complex projects that require significant technical expertise and meticulous planning. Furthermore, all processes involving the handling and transfer of business data must be designed to comply with relevant data privacy laws and industry regulations. Let's first talk about getting data into and out of the system in bulk. For this, Dynamics 365 provides a powerful, built-in toolset called the Data Management Framework, or DMF. The DMF is the central hub for handling tasks like the initial data migration from a legacy system, or for ongoing bulk data imports and exports. The core concept within the DMF is the data entity. A data entity is an abstraction, or a simplified view, of the underlying complex database tables. For example, instead of having to work with a dozen different technical tables that store customer information, a developer or administrator can simply work with a single customer entity. This makes the process of managing data infinitely easier and less error-prone. A typical use of the DMF for importing data would follow these steps. First, you create a data project and add the entities you need, like customers, vendors, and products. Then the system can generate a template file, often in an Excel format, with all the required columns. Your team would then populate this template with the clean data from your old system. Finally, you upload the file back into the DMF, map your columns to the fields in the entity, and run the import job. The framework handles the validation and insertion of the data. This brings us to the topic of connecting Dynamics 365 with other systems in real time, which is handled through integrations. No modern ERP system exists in a silo. Businesses in the US constantly need to exchange data with other platforms, perhaps a third-party logistics provider, a specialized e-commerce website, or a human resources information system. The primary way this is achieved in a modern, secure fashion is through APIs, which stands for Application Programming Interfaces. Think of an API as a secure, predefined contract that allows two different computer systems to talk to each other. Dynamics 365 exposes its data entities through a standard known as OData REST APIs. This allows authorized external applications to perform real-time operations, like creating a new sales order or querying a customer's credit limit, directly within Dynamics 365. Finally, let's discuss a special integration that is key to the Microsoft ecosystem: DualWrite. DualWrite is an out-of-the-box infrastructure that provides a tightly coupled, bidirectional, and near real-time integration between Dynamics 365 Finance and Operations and Microsoft Dataverse. Because other Dynamics 365 applications, like Dynamics 365 Sales or Customer Service, are built on Dataverse, DualWrite effectively creates a single unified data source for key information. For example, with DualWrite enabled, when a salesperson creates a new customer account in the CRM application, that same customer record is instantly and automatically created in the Finance and Operations ERP system. This eliminates redundant data entry, reduces errors, and ensures that both the sales team and the finance team are always looking at the exact same, up-to-date information. In summary, the data management and integration capabilities of Dynamics 365 provide a comprehensive toolkit to ensure that data can be migrated, imported, exported, and synchronized effectively and securely, cementing its role as the central system of record in a modern enterprise. In our final chapter, we will bring everything together to discuss the implementation journey and a look to the future. Welcome for the final time to our deep dive into Microsoft Dynamics 365 Finance and Operations. Over the past 14 chapters, we have journeyed through every major facet of this comprehensive platform. We started with the foundational pillars of finance, moved through the physical world of supply chain and manufacturing, managed the entire customer lifecycle from sales to service, and explored the technical underpinnings of administration, analytics, and customization. In this concluding chapter, we will bring everything together by discussing two key topics. First, a high-level overview of the implementation journey, and second, a look to the future of this ever-evolving platform. As we conclude, we must re-emphasize our most important principle. This series has been for educational and informational purposes only. An ERP implementation is a significant and complex business transformation that requires dedicated project management, deep expertise, and strategic planning. Furthermore, any discussion of future technology is based on publicly available information regarding Microsoft's product roadmap and should not be considered investment advice. Let's first talk about the implementation journey. Deploying an ERP system like Dynamics 365 is not merely an IT project. It is a fundamental business project that impacts people, processes, and technology across the entire organization. While every project is unique, they typically follow a structured, phased approach. The journey often begins with an analysis or discovery phase, where the business's specific requirements, pain points, and goals are identified and documented. This is followed by a design phase, where implementation partners and business leaders architect the solution, determining exactly how Dynamics 365 will be configured to meet those requirements. Next is the development and configuration phase. This is where the system is actually built. Standard features are configured, necessary customizations are developed, and integrations with other systems are put in place. This leads into the crucial testing phase, where the solution is rigorously tested by both the project team and the end users to ensure it works as expected. Finally, after thorough training and preparation, comes the deployment or go-live, which is the carefully managed cutover from the old systems to the new Dynamics 365 environment. This is followed by a period of post-go-live support to stabilize the new system and ensure a smooth transition. Throughout this journey, the importance of working with an experienced, certified Microsoft implementation partner cannot be overstated. Success also hinges on critical factors like strong executive sponsorship and a dedicated focus on organizational change management, helping the people within the company adapt to and adopt the new ways of working. Now let's shift our gaze to the horizon and look to the future. The vision for Dynamics 365 is clear: to create a more intelligent, automated, and predictive ERP system. The driving force behind this evolution is artificial intelligence and machine learning. Microsoft is embedding AI capabilities directly into the fabric of the application. This is designed to move beyond simply recording what has happened to proactively providing insights on what might happen next. For example, using machine learning to forecast cash flow or predict potential supply chain disruptions. The most visible manifestation of this is the introduction of Microsoft Copilot. Copilot is an AI-powered assistant that works alongside users directly within the Dynamics 365 interface. The vision for Copilot is to allow users to interact with the ERP system using natural language. A user might ask, "Summarize the outstanding balance for our top 5 customers in the Southwest region." And Copilot would be designed to provide the answer. It aims to help automate tasks, summarize vast amounts of data, and even assist in drafting content, freeing up users to focus on more strategic, high-value work. The future will also see even deeper integration with the entire Microsoft ecosystem, blurring the lines between the ERP system, collaboration tools like Microsoft Teams, and productivity applications in Microsoft 365. In closing, from the foundational debits and credits in the general ledger to the future of AI-powered assistants, we have seen that Dynamics 365 Finance and Operations is a vast, scalable, and intelligent platform. It is designed to be the digital core that empowers modern enterprises across the United States to navigate the complexities of today's business landscape and embrace the opportunities of tomorrow. Thank you for joining us on this comprehensive journey.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.